Ethereum is very interesting because this bull market has all been about Bitcoin, right? There was not much interest, but things never stop, right? But in the last 3 months, we have seen, I think Ethereum went up like 125% compared to Bitcoin around 40%. So it seems like there is a trend into that direction. And obviously there are many layer 2s that have been, quite active over this time. So tell me, where do you see Ethereum going from now?
I think Ethereum has a very long way to go from a returns perspective, which is really exciting as an investor. There's this interesting element, what we've spoken about today is for the past 4 or 5 years, there's been a lot of red tape or barriers to entry for many, many investors, and not just investors, but also corporations who maybe want to utilize the technology to make their operations more efficient or to grow their businesses, users who want to be able to interact with the technology, but perhaps can't because of the jurisdiction they're in, or there's not regulatory clarity, or there's not a good front end to access the technology. But I think what's super interesting with all of that holding us back from a regulatory perspective and a barriers perspective, and now that Valve being released has actually lined up perfectly with Ethereum's technical roadmap.
Hi and welcome to the Financial Fox, where we dive into the latest trends shaping the world of finance and technology. My name is Stefania, and today on the show I have Ryan Rasmussen, Head of Research at Bitwise Asset Management, a leading crypto-focused asset manager. Ryan has been at the forefront of analyzing transformative trends in cryptos for quite some time, from Bitcoin ETFs to tokenization, institutional adoption. So we are going to discuss different things today, and I'm sure that you are gonna love this interview. But before we get into a couple of things, if you are watching the interview, take a moment to subscribe or follow us. If you are watching on YouTube, you can subscribe to the channel or follow us on X or Instagram. Remember, your support is crucial to grow the channel so we can create more content to make you financially free and more empowered and educate more people about crypto. And also, please remember that all the content on the show is for informational purposes only and not intended as financial advice. Any opinion expressed by me or my guests are ours alone, and you should not act solely on the back of them. As always, do your own research, level up your skills, and be accountable for your own decisions. With that being said, let's get to the interview. Hi Ryan, how are you doing?
I'm doing well, how are you?
I'm good. It's great to have you on the show.
Yeah, happy to be here, excited to speak with you.
Right, so shall we maybe start with some introduction? Tell us about what you do at Bitwise and what you're focusing on right now.
Of course, so Bitwise is a crypto asset manager. Today we manage about 13 billion in assets on behalf of clients. Majority of those clients are professional investors, so the wealth managers, financial advisors, family offices, endowments, pensions, hedge fund managers of the world. But we of course serve all types of investors through ETPs, index funds. We also have a staking business. So really what we aim to be at Bitwise is a partner for investors as they access crypto markets. We've been around since 2017. I've been on the team since early 2021, so over 4 years now on the research team at Bitwise, and today I lead our research efforts, and that includes everything from presenting to financial advisors and wealth managers on what Bitcoin is, why it matters, what Ethereum is, what staking is, kind of the whole gamut. But we also run the indexing side of the business and of course interact with the different crypto ecosystems to stay up to date on what's going on and to write in-depth research reports on all the various components of the crypto industry.
Now, what I wanted to ask you, which I think is quite interesting, obviously I'm based in London, and a lot of our viewers are investors, fund managers from the UK, and you are talking to a lot of US investors. Maybe tell us a little bit about the type of investors that you're talking to, the kind of feedback you are getting, how it's changed over time. And then, as I understand, also Bitwise is also, you are more like a global company. So if you have got some kind of feedback of investor outside the US, and what is not the stereotypes, but there are definitely differences. And then I can share also from my side the way I see.
There are certainly differences. I'd love to hear what you've observed on your side of things. I know at Bitwise, it's really changed quite dramatically over the past 4 years. And I love talking about this because it shows both how far we've come in the journey of adoption of crypto, but it also shows how far we still have to go, which I think is really exciting and speaks to the opportunity ahead of us still. 4 years ago when I joined Bitwise, we'd often go and knock on the door or go into meetings with financial advisors. 50% of the time, or maybe even 75% of the time, you walk into the meeting assuming that you're going to get laughed out the door. They take the meeting, they know that you work in crypto, they maybe don't know that much about it, and within 5 minutes, it's very clear, are they there to tell you that you don't know what you're doing and that crypto is going to zero and you should look for a new job? Or are they open to understanding what this new technology is, what this new asset class is, and how and if they should invest in it? And that was a challenging experience for all of us at Bitwise because, of course, we're long-term believers in the space and in the technology. And I think that's changed so dramatically in the past 4.5 years that it's really hard to put into words, but of course, I'll try. And nowadays we have inbound calls every single day from financial advisors and RIAs and some of the largest wealth management platforms in the world, like Morgan Stanley and Raymond James and Wells Fargo. And they are sprinting to get up to speed with all aspects of the crypto ecosystem, whether it's investing in Bitcoin through the newly launched ETFs, whether it's trying to understand what staking is or understand how to get exposure to tokenization and stablecoins. And I think that speaks to just how far we've come in the past 4.5 years, but the fact that they're still asking somewhat relatively basic questions in many instances, I think speaks to how much further we have to go.
100%. I think the same obviously has been happening here. And I would say I got into crypto was late 2016. And I mean, since up to probably a few years ago, I was kind of, God, she's in crypto, is going to go to zero. Especially, when you run a PR, IR agency, you're working with a, capital, in the capital market space with publicly listed company. That's kind of like the ideas. It's kind of like, all right, I'm not really sure about these assets, but, talking to fund managers, really that you see them maybe they started to invest on a personal level, in the last few years. And now with the Bitcoin Treasury companies, they're also, quite popular now on the UK public markets. I think they started to realize that obviously these assets are not going away. Bitcoin is becoming a big part of an important assets in the investment, when it comes to investment. So I do think that finally, the traditional, let's say, institutions, they are coming to the space. So, definitely a lot of pushback, but I think now we are obviously getting more attention. Now, what is very interesting is that when it comes down to like UK and maybe Europe as well, for them it's just really important what's happening from a regulatory perspective, because the risk appetite from our side of the world is very different from the risk appetite that you have got in the US. Another things that we were just chatting before this interview was about the data as well, and I do agree with you. Institutional investors here, they've got a different ways to kind of assess their investment, and definitely when it comes down to data and metrics, that is actually quite important and more maybe than the underlying narrative.
Yeah, completely agree with you. The regulatory environment is extremely important to institutional investors. It helps them understand how much risk there is associated with the investment, both from a returns perspective, but also from a career risk perspective. If you think about the day-to-day for an institutional investor, they're digging into all types of different asset classes. They only have so much time to spend on stocks versus bonds versus private credit versus private equity versus crypto. The thing that happens when they spend 5-10 minutes of their day looking into crypto is they see a Wall Street Journal headline talking about some protocol was hacked for $100 million, or the SEC is going after the biggest crypto companies in America like Coinbase and Gemini and others. Of course they're going to think, wow, I can't touch that. Imagine if I was invested in one of those companies or one of those projects and the government came after that and a client found out that I had underwritten that asset. There's career risk for them. There's obviously risk that if something happens to one of those companies from an enforcement perspective, it could affect performance. And so what we saw most wealth managers do during the last administration is just strictly stay away from investing in the space. There was too much career risk, too much risk of losing clients, too much risk of losing assets. And what we've seen with what kicked this off was BlackRock getting into the market with their application for a Bitcoin ETF in 2023, then the subsequent launch of the Bitcoin ETFs in January 2024, which of course have been the most successful ETF launches of all time by a long shot. And then subsequently, most importantly, with the November 2024 election, the change of the administration, and a complete 180 of how the US is approaching regulating crypto assets, even up until yesterday when the House passed both the Clarity and the Genius Act, which is market regulation and stablecoins. I think that's allowing investors, and this is certainly what we're seeing when we speak to investors, that they finally feel comfortable saying, okay, this is going to be here for a long time. Clearly this is important technology. Clearly it's not going away. How should I get exposure to it, and what areas do I want exposure to?
What's the impact of the acts that passed yesterday?
It's really wide-ranging how impactful these acts will be. On the stablecoin front, that's one of the markets that we anticipate growing faster than majority of markets in the financial space have grown over the past 50 years. For instance, the stablecoin market today sits somewhere around 250 billion in AUM. The Treasury of the Secretary, Scott Bessent, believes it's going to grow to 2 trillion over the next 3 years. And there's really only a few other markets out there that have ever grown at that rate. We're talking a 10x growth in less than 3 years. And I think that speaks to how important this legislation is with the Genius Act. This means that the traditional financial system can finally integrate stablecoins, that traditional banks can finally launch their own stablecoins or expand into those businesses. Same with payments providers, same with fintech companies. They can finally do that without the fear of enforcement or without the fear of crossing some opaque line they do or don't know exists. And I think that's going to drive the growth of stablecoins forward tremendously. We're already starting to see that happen. I think one anecdote that speaks to that is that the Bank of America CEO earlier this year said as soon as there's stablecoin regulation, he wouldn't be surprised for the Bank of America to launch their own stablecoin. So I think this regulation allows for that expansion and that growth to really take off. It really ignites that growth, and it's going to be really exciting to watch.
On the stablecoin point, if everybody is launching his own stablecoin, there's going to be some kind of fragmentation in the liquidity, and if that is the case, how we are going to bring all together? Is Ethereum going to be doing that?
Exactly. I think you nailed it on the head. There's a coordination layer here that exists, similar to how I have a checking account at a few different banks. My parents, my friends, we all use checking accounts at different banks, perhaps. Maybe some are the same. We have credit cards, we use Venmo, we use PayPal, we use Zelle. There's some underlying infrastructure coordination layer that connects all of those different systems. And today, that's really the SWIFT network, but it's very slow. It takes days for transactions to settle. There's a reason why when I cash out my Venmo account, it takes multiple days for it to get to my bank account. Or when I use bill pay, it takes multiple days for that transaction to settle, and I just see it pending in my bank account. And what we're going to see is something like Ethereum, and actually most likely Ethereum and Ethereum Layer 2 protocols, act as that coordination layer beneath all of these different stablecoin transactions and payment systems. I think a great example of that is the recent integration with Shopify and Base, which is Coinbase's Layer 2 solution. We're now going to see USDC, the second largest stablecoin, be part of the payment flow and checkout process across all Shopify payments, and they're going to settle those transactions instantly on Base, which of course ultimately settles to Ethereum. And what users are going to see on the back end, or rather sellers are going to see on the back end of Shopify, is their local currency being deposited in their bank account. So Ethereum is going to be that coordination layer for majority of the movement of this multi-trillion-dollar market.
Let's take a moment to talk about our partner, Hive Digital Technologies, one of the fastest growing publicly listed Bitcoin miners. By the end of the year, they are planning to quadruple their operational footprint, representing 3% of the global Bitcoin network. They were one of the first Bitcoin treasury companies and the first crypto miners to implement an AI strategy. Their data center in Canada, Sweden, and Paraguay are powered entirely by green energy. Their priority is to to build and scale a lean shareholder-focused company that also transforms the communities where they operate. Remember, they have an AI business, their subsidiary company called Buzz HPC. If you are a brand or a company interested in AI, check out their Buzz HPC tools for cutting-edge solutions. Visit hivedigitaltechnologies.com to learn more. Now, back to the show. Ethereum is very interesting because this bull market has all been about Bitcoin, right? And Ethereum is being kind of lagging behind, and you don't really know if the tech is able to sustain that. There was not much interest, but things never stop, right? So it's still there, but in the last 3 months we have seen, I think Ethereum went up like 125% compared to Bitcoin around 40%. So it seems like there is a trend into that direction, and obviously there are many layer 2s that have been quite active over this time. So tell me, where do you see Ethereum going from now?
I think Ethereum has a very long way to go from a returns perspective, which is really exciting as an investor. There's this interesting element, what we've spoken about today is for the past 4 or 5 years, there's been a lot of red tape or barriers to entry for many, many investors, and not just investors, but also corporations who maybe want to utilize the technology to make their operations more efficient or to grow their businesses. Users who want to be able to interact with the technology but perhaps can't because of the jurisdiction they're in, or there's not regulatory clarity, or there's not a good front end to access the technology. That's all held us up over the past 4 or 5 years, and it's been very frustrating for those of us in the crypto space because when we use it, we see how transformative the technology is. What I think what's super interesting with all of that holding us back from a regulatory perspective and a barriers perspective, and now that Valve being released has actually lined up perfectly with Ethereum's technical roadmap. And it's almost like a beautiful coincidence that finally, when we're ready to see institutions and corporations and governments embrace this technology, Ethereum is scaled enough to be able to handle the transaction load and the activity load. Because 3 years ago or 5 years ago, there's no way that stablecoins could have grown to $2 trillion on the existing Ethereum network that was proof of work and didn't have layer 2s, that was very slow and very costly. But today, as I mentioned, there's Base, there's Optimism, there's Arbitrum, there's a number of layer 2 scaling solutions that handle thousands of transactions per second at sub-cent costs. And that's what's needed in addition to regulation, in addition to adoption by institutions and entrepreneurs, to allow this technology to hit escape velocity. So I just think Ethereum's had this very, for coincidence or not, is having this moment where everything's intersecting at the exact right time to have this explosive growth.
How do you see these layer 2s? What role are they really playing? Which are the ones that you think are going to be thriving, and maybe for which use case? That's kind of the way that I like to think about it, different chain for like different use. But, that's the way I see it. Maybe you have got a different thesis.
That's exactly right. I think there will be a number of winners. There won't only be one, in the same way that in most industries you have winner takes most markets, but there's not typically one winner takes all. And I think that'll be the same in the layer 2 space. I think, we're very excited about the OP stack, or Optimism's tech stack, because it allows things like Base to be built on top of it. And so it kind of creates this infrastructure for other layer 2 scaling solutions to leverage. Excited about Base, of course, excited about Arbitrum. But I think what's also interesting about Ethereum's construct is that at a certain point, as much as people care about sub-cent transactions and sub-second transactions, there's going to be billions of dollars worth of transactions taking place on Ethereum, sometimes in a single transaction. And for those transactions, like if it's a bank or if it's a large corporation that's moving $100 million or $500 million or $1 billion for some reason or another, they don't really care about paying a $100 fee. That's pretty immaterial to them. So I think those large transactions by large institutions will happen on Ethereum's mainnet because that is the most secure way to do it. It gives you the most secure finality and settlement. And then I think consumer-facing applications and smaller value transaction-like applications, these can be anything from decentralized social media with Farcaster, or DPIN, or stablecoin transactions between consumers with Base and Shopify. I think those will happen on layer 2 scaling solutions. So it does fragmented a bit, but I believe the front end of that technology will exist in such a way that the back end user isn't really choosing which layer 2 or which layer 1 to interact with. They're just going about their day, and all of that choosing and routing of transactions is happening on the back end.
It seems to me like a revival of 2021, 2020. You know what I mean? It's like everything is coming back, and actually now it can be done. But there were others at the time, like, you know, the issue about KYC and identity, and, you know, obviously security concern. Are we okay now to get all these things over the line?
I certainly think that the Clarity Act is a step in the right direction. I know, you know, in the UK, MiCA passed, I believe now almost 2 years ago, which helped lay the groundwork for KYC, AML, and other regulations to be in place so that companies like exchanges, like stablecoin issuers, like consumer-facing applications could comply with regulations. There's this pocket of crypto that thinks we should be completely anti-regulation, completely anti-government, and I honestly think that's just not the right way to think about them. No technology is going to thrive in an environment where you're completely outside of modern society's guide rails. And so I do think that the Clarity Act is going to help innovators and entrepreneurs understand what are the rules of the road. What can I do? But importantly, what can't I do in order to build a business that thrives and that grows? And I think there's things like Polymarket, which is a great example of this, right? The prediction market that, you know, really became world famous during the last election race, as it called the presidential election in the US before the widely popular polling and media networks. They were pushing boundaries before regulations were in place, and I think now with these regulations in place, they'll be able to expand their product, which is widely popular outside the US, to US users who currently have been restricted from using it. And so I think that's an example of why having regulation in place, whether it's KYC, whether it's AML, whether it's clarity around token launches and who regulates it from the CFTC to the SEC, I think all of those things are what helps drive adoption and, importantly, innovation forward, because no entrepreneur wants to launch a business where there's a coin toss probability of them being raided by the FBI at 5 a.m. like happened to the Polymarket founder back in November. And I think that is the biggest unlock perhaps around market clarity, is that innovation can finally thrive without the threat of enforcement hanging over its head.
Yeah, let's talk about tokenization, which is considered kind of like the next major drivers of the bull market. Where we are right now, and do you think is that one of the ways that Ethereum and its ecosystem is going to develop? Is that into that direction?
I, as a manager like Bitwise, hey, this technology is going to change the way that modern finance operates, especially when you're talking to someone who's been in the traditional finance ecosystem, like a wealth manager, for 30, 40 years. So what we like to tell them is 3 different people across the financial spectrum are talking about tokenization in a way that you really need to pay attention to. The SEC chairman, Paul Atkins, who was recently confirmed as the SEC chairman, who's a pro-crypto chairman, he said that if it can be tokenized, it will be tokenized. Everything will be tokenized. So that's the regulator of the most important regulatory agency when it comes to financial markets in the US. Then you had BlackRock CEO Larry Fink, the CEO of the largest financial institution in the world and perhaps one of the most important financial figures in the world, who said on one of the most prominent financial channels in the world, CNBC, that every stock, every bond, every fund, every asset can be tokenized. Again, financial giants talking about tokenization in a way that's really hard to grasp because it is so wide-reaching. Then you had Robin CEO Vlad Tenev, who of course is a bit more on the progressive side of finance, with Robinhood being more of a progressive company than some of these older institutions, saying that tokenization is the biggest innovation in the past decade. So I think that's a wide spectrum, a regulator, a traditional asset manager, then a newer fintech company. The leaders of these organizations saying tokenization is going to have the biggest impact in decades. I think that speaks to really where this market is headed, where stocks, bonds, real estate, non-financial real-world assets will all be tokenized and trading on blockchains, because it's just a better, more efficient, more secure, more decentralized coordination layer than those that exist today, and it's going to make the world more efficient.
And really also more convenience, right? You don't need to, you can trade all the time, all the weekend, the world doesn't have to stop on Friday, right?
Yeah.
It is interesting, but I would like to understand your views. Is that going to happen on Ethereum, or do you see perhaps Solana playing a role? Because, one of the things that made me thinking was all the meme coin craziness, which was definitely not something that I was involved, but it was interesting to watch. Maybe kind of like show us the resilience of a chain that could handle all these tokenized assets. But, then is that really maybe the space that will be okay for tokenizing stock bonds, or maybe is the Ethereum the space?
I do think that Ethereum is going to dominate the tokenization space, certainly, and Ethereum L2s will greatly benefit from tokenization. The way that I like to think about the difference between perhaps the Solana and an Ethereum is like just two different operating systems, like iOS and Android, and both exist in the world. They coexist, they thrive. Some people prefer to use Apple iOS. Some people prefer to use Android. Some developers prefer to develop on Android. Some prefer iOS, and then some use both. And I think we're going to get into a world where most of these tokenized asset issuers use more than one because they view these as distribution networks to reach end users and to reach clients. And so I do think Ethereum will take majority of the market share. Part of the reason I believe that is for what you somewhat mentioned. If you're an asset manager who's been around for 50 years and your reputation's extremely important and you're a relatively conservative firm, you're going to sit back and look at where should I tokenize these assets? And you're going to say, okay, BlackRock started with Ethereum. Maybe I should do what BlackRock did. You're not going to say, Trump launched a meme coin on Solana. Maybe I should start with Solana because that's more serious. And for better or worse, obviously the meme coin mania helped boost Solana in adoption and usership and helped prove the technology is rather resilient. It also left a bit of a bruise on that technology as it relates to institutions taking it serious. And so I think that's one reason why a lot of this will happen on Ethereum, but I also just think Ethereum has a longer track record of uptime, security, and finality than Solana. Now, that being said, as I mentioned, I think multiple can do extremely well, multiple blockchains. And I think Ethereum and Solana will both thrive in the years to come from the growth of tokenization, stablecoins, DeFi, DePIN, consumer applications, and so on.
When it comes to tokenization and capital markets, public listed company stocks, how do you see the time, and how do you see this transition happening? What's going to happen? Is that the stock is going to be also on the blockchain and, on the stock market? How that is going to work?
It's a really good question. I was thinking about this morning a bit, actually, that we talk a lot about tokenization as an industry, but I'm not sure I've really seen anyone sit down and explain in simple terms why tokenization is so important and how it's going to revolutionize finance. You can say it's the biggest innovation in the past decade, but what does that really mean day to day? And I think your question gets exactly at that. Am I going to stop trading Apple stock in my Charles Schwab account? Am I going to trade it on a crypto wallet on Base? Or is Charles Schwab going to integrate an Ethereum layer 2 into its back end, and I'm still going to use that application on the front end? I think the real answer is that we don't know yet. And that's in part what's so exciting about the opportunity ahead, is that we don't really know how this is going to play out, but what we do know is that bringing real-world assets on-chain is going to grow into a very, very large market, and we're still in the early innings. Today, it's about a $25 billion market, and it's going to be a multi-trillion dollar market, and that upside is very, very appealing to investors.
You see, it's quite interesting because I think companies are always looking at an edge, at the next narrative that sells better to investors. That's why, the Bitcoin Treasury companies, the share price goes up hundreds of time and everybody's happy. So I was just thinking, maybe you see some public listed company now issuing, tokenized stock as a potential narrative to get the share price up.
Yeah, I think with regulations in place, I think that will certainly happen. It goes after two things. It goes after the narrative of, look, we're embracing this technology that's growing at a very fast pace, but it also allows investors who perhaps have generated their wealth or moved all of their wealth to sit within blockchain rails, allows them to access investment in these companies, and they're hungry to invest in these companies because they are embracing the technology that they live and breathe and use every single day. So I would not be surprised to see exactly what you outlined there.
Interesting. So let's talk a little bit about these treasury companies. Obviously everything started on Bitcoin, and now it's kind of like there are also some Ethereum treasury companies. But talking about the Bitcoin ones, how do you see this trend playing out? And also the question that I really want to ask you is about yield on Bitcoin. I think I saw something from SUI. They kind of have a solution to kind of have this yield on Bitcoin, and maybe that is something that obviously those corporations buying Bitcoin, that they obviously do for the long term, but it wouldn't be nice for them to make some money on that.
Of course, I think it would be very smart for them to do that, and of course won't name any names, but we've been approached by a number of these Bitcoin treasury companies at Bitwise to explore solutions for them to put those assets to work. And that can be in a number of ways. You can write covered calls on top of these assets and sell those to generate income. You can also utilize lending or borrowing or perhaps staking to generate additional income. But absolutely, if these companies are going to invest hundreds of millions or billions of dollars in Bitcoin and they have a very long-term investment horizon, it just makes sense for them to want to generate additional income and put those assets to work. So I do think we're going to see a lot more of that come to market, whether it is through covered call strategies or options income strategies, whether it's through staking or lending and borrowing. And it's an exciting market, especially for us as an asset manager, because it allows us to craft bespoke products for very large clients.
So basically you will be creating those products to generate yield, seeing what is available out there, whether it is, an Ethereum layer 2, you can do wrap Bitcoin or whatever, but you can kind of customize the product based on what, the clients need, basically.
Exactly. I think there's a couple elements to this. So the extremely large treasury companies, right, the micro strategies of the world, they have a large enough treasury that they'll probably bring someone in-house to manage those assets in the same way that large corporations have their own treasury analyst or head of the treasury inside their finance team that reports to a CFO that's allocating cash to money market funds and bonds, etc. I think large corporations will probably bring someone in themselves because it's more cost effective for them to do that, and they have the capability of doing that. I think smaller treasury companies, and not that small of treasury companies, but just smaller than the giants that are Strategy and Marathon in 21, I think they will likely use an asset manager to outsource the management of their treasury assets through a number of different strategies, and they might have tranches that they're willing to take different risks with to get a mixed yield that's a bit higher than just straight covered calls, right? They might be okay writing covered calls. They might be okay seeking staking on a layer 2 or a programmable blockchain ecosystem, which has a higher yield, but of course comes with slightly higher risk, and they'll outsource that risk management and those activities to a crypto specialist, which at Bitwise, we're of course very happy to serve that need. We've been doing that for over 7 years on behalf of clients, and we're excited to continue to do that as this trend continues to grow.
Interesting. When it comes to Ethereum treasury companies, tell me, is that a thing that is going to become so popular as well? And also, if Bitcoin is mainly an asset for the long term to protect against inflation, you have all the Michael Saylor's zombie company profile, you've got lots of cash sitting on your balance sheet, you don't have to reuse into investments rather than leaving in the bank. You can buy Bitcoin. What is the reason to build an Ethereum treasury?
Yeah, so there's two different reasons why you would build these different types of treasury companies, and there's, I think, similar reasons on why you'd want to invest in one or both of these companies as an investor. Of course, Bitcoin treasury companies are typically more focused on using cash or raising cash to help them hedge against financial instability, spiraling inflation, crippling government debt across the world that seemingly has no way of being reined in. And so they want to invest in this non-sovereign, untethered asset that is Bitcoin, which helps hedge against that financial uncertainty. So those are Bitcoin treasury companies that are owning Bitcoin as an asset on their balance sheet for that reason. Then you have Ethereum treasury companies who aren't necessarily investing in Ethereum because they think it's a hedge against financial instability, and it's this fixed supply asset that's going to allow them to ensure that they're hedged against financial instability. Instead, they're investing in this technology because they look across the spectrum and see tokenization and stablecoins and DeFi and gaming and DePIN, and they say, where are these things going to be built? They believe they're going to be built on Ethereum, so they want to own Ethereum so they have exposure to that high growth, highly disruptive technology. And I think investors in these companies approach it in the same way. Some will want to invest in Bitcoin treasury companies because they are worried about fiscal instability and spiraling inflation and crippling debt. And then some will want to invest in Ethereum treasury companies because they believe Ethereum technology is going to be highly disruptive and very high growth. And then some will want to invest in both because they want to have diversified exposure to both of those trends.
It's very interesting because when I think about building a treasury, you also do it because eventually you can use the assets for maybe something that is related to your business. So maybe, I don't know, something where Ethereum can become useful, or, you know, the simple things. I'm going to build a stablecoin treasury, and that maybe helps me with the payment because I have a company that has got different subsidiaries in different countries. I can settle everything, you know, only one layer. It just make things easy. But I understand that it's not like easy to integrate those assets into like day-to-day operations as well.
Yeah, I mean, at some point, I think you're exactly right that we'll see companies that are building an operational treasury of Ethereum in order to facilitate their underlying operations. I think Tom Lee of Fundstrat is a great example of someone who does both. So Fundstrat owns Bitcoin on their balance sheet because they believe that Bitcoin is going to continue to grow in the face of financial instability. And he just launched an Ethereum treasury company not too long ago because he believes that the future of the financial industry is going to be built on top of Ethereum. And I think that is exactly what we're going to see companies do. And I know his belief that he's spoken about, which resonates with me certainly, is that these large corporations, whether it's JP Morgan or Bank of America or BlackRock, are going to need to own Ethereum because they're going to need to settle transactions on the Ethereum network to the tunes of hundreds of billions of dollars a year. So it's exactly what you were saying, is that some companies will actually need to own the asset from an operation. All of this just drives demand for the asset, which is part of the narrative of why you'd want to invest in this technology, is because there's going to be growing demand for the technology itself and for the asset that's needed to fuel that growth and that adoption and that activity.
And this has been a great conversation. Really enjoy it, really.
Thank you so much for having me. It's been really, really fun for me, and I hope to do it again sometime.
So before we go, I just want to ask you, do you have any other prediction that, you know, you want to share with us, or any kind of final thoughts?
Yeah, you know, we put out predictions at the beginning of the year, or rather the end of 2024, we put out predictions going into 2025, and we just put out a mid-year update earlier this month that was a pretty interesting experience to look back into. And there's a couple of those predictions that we already have gotten right that we're really excited about. I think the one that we're really excited about that most people aren't talking about is that the Department of Labor in the US just recently repealed some Biden-era regulations that restricted 401k platforms from allowing companies and investors to access Bitcoin or crypto assets in their 401ks. So why we're excited about this really nuanced piece of regulation that most people probably fall asleep as I talk about is that there's trillions of dollars, nearly $10 trillion in 401k plans. There's constant inflows into 401ks every 2 weeks as Americans and people around the world get paid and automatically contribute. And now those assets can start flowing in to the crypto ecosystem, whether it's through Bitcoin ETPs, Ethereum ETPs, or these treasury companies. So I think we're really excited about the change in regulation that's happened this past week, and what that means for the growth of tokenization and stablecoins. I think we've seen crypto IPOs happen this year already, and I think we'll continue to see more and more crypto IPOs. That was another one of those predictions. The one prediction that I've been sitting around quite a bit in the past few weeks is Coinbase. Now, we predicted at the beginning of the year that Coinbase was going to flip Charles Schwab and become the most valuable brokerage in the world. And that was a big swing that we took because it needed to do multiple times growth this year from a stock perspective in order to do that. And the reason that we still believe that Coinbase will flip Charles Schwab is because Wall Street just fundamentally does not understand Coinbase's business model. They look at Coinbase and they think that Coinbase is just a crypto exchange where people trade Bitcoin, when of course us in the community know that Coinbase is so much larger than that. It's stablecoins, it's tokenization, it's staking, it's custody, it's trading, it's derivatives, it's base. And I think Wall Street is finally just starting to wake up to that. And I think you've seen that reflected in the appreciation in Coinbase's stock price over the past few weeks. So that's one prediction that I'm watching closely as Wall Street finally wakes up to realize that Coinbase is not the Charles Schwab of crypto, it's actually the Amazon of crypto.
Yeah, really interesting. I'm curious to see where we get with the Coinbase price this year, because I was also very bullish at the beginning of the year, and then, it wasn't really picking up, but maybe it was exactly the legislation that we needed. Ryan, thank you so much for coming on the show. It's been great.
Thank you so much for having me.